Good morning, students. Welcome once again to the Intermediate Cost and Management Accounting, and we were discussing the employee cost. In the last session, let's recall what we have done. We have talked about the various departments which ensure that the employee cost or the labor cost is controlled, right? So firstly, we had the personnel department, which would recruit, the engineering and work study department, which will find out what's the right way to do a job analysis, job evaluation, time and motion study, and so on. The third department was timekeeping and time booking, which will ensure that the records of the employee in the organization are kept. What time are they coming and leaving the job? And what are they doing when they are in job? So what are the things they are doing? That is time booking. How they are spending the time when they are within the factory premises. Then the payroll department, whose job is to ensure that the right wages are calculated for all the employees and they are paid. And last was your cost accounting or accounting department, which will ensure the right allocation of employee costs to the various jobs and departments to deduct the statutory dues from the whatever the payment is due and get it deposited to the statutory authorities. Then we talked about some practical concepts. One that we started was with labor turnover. That means how the employees are leaving the organization. In this, we spoke about separation method, flux method, and replacement method. Separation means number of employees leaving the organization, whether they retire, whether they resign, whether they are terminated, or in any ways discharged. Replacement means of those who left against those employees, how many new employees have been recruited or replaced against those who have left the organization. Flux is the separation plus replacement, plus if there are new accession or new recruitments because of expansion or any other reason. We also talked about labor turnover cost, which involved not just the opportunity cost of profit foregone because of the sales lost during which the labor was not productive, but also because of settlement cost, compensation, separation cost, compensations, and other replacement cost, training, and so on. Then we talked about what are the wage payment systems in which we spoke about either the payment can be made on time basis. That means the workers can be paid for the time they remain in the organization, or they work during the actual hours they have put in the job, or else they could be paid on the basis of piece rate, which means the amount of pieces they generate or the output they produce. Both have their pros and cons. If you pay the time rate, it indicates that even if the worker is non-productive, they will also be paid. This will frustrate those workers who are working efficiently in the long run. If we keep a piece rate method, that is good for those workers who are efficient, but it is also possible that in order to generate more quantity of output, the workers do not take care of the machines if they require rest in between. They don't take care of the quality of the output. So this has to be fixed in some way. Then there has to be some incentive system we can have, which is maybe based on time, which may be based on piece, which may be based on a combination of two. So sometimes the incentive systems work better than time rate or piece rate. It motivates those employees who are working hard and generating good output, as well as it ensures that the minimum wage is paid to all the workers who have put in their time in the system. The prominent incentive system in the last session that we discussed were Halsey and Rowan plan. Before I begin, I'll just take a quick recap of one question, which is on labor turnover. So you can give me your inputs in this. We have to calculate the labor turnover rate and flux rate. It is said that the number of workers on 1st of January is 7,600 and on the last day, 31st December, 8,400. So for labor turnover, the first thing we need for any of the three methods is average number of workers during the period. So average number of workers would be 7,600 plus 8,400, opening plus closing divided by 2. So you will get the average number of workers as 8,000. Right. And for separation method, we calculate how many workers left during the period. So we can see during the year, 80 workers left, 320 discharged, 1,500 recruited. Out of the 1,500, only 300 were recruited because of exit. So how many workers left? Those who left plus those who were discharged. 400 workers separated out of 8,000, which is equal to 5%. So the labor turnover rate as per separation is 5%. If we look at replacement, only we will count those new recruitments which are against those 400 workers who have left. So there are 300 workers who were recruited because of exits. So only these 300 workers are replaced. So if you will calculate 300 on 8,000, I think it should be 3.75%. Then we see that our total number of new recruitments were 1,500. So if 1,500 was the total recruitment, out of which only 300 replaced, it indicates that 1,200 were new accessions. Maybe due to expansion plans or anything. Due to expansion plan. So these are new accessions. So if you are asked to calculate the new accession, 1,200 on 8,000 would be the new accession, 15%. But if we calculate the flux, then you have those who have separated plus those who have been replaced plus those who are new accession. So total new recruitments. And once again, divide by average number of workers, which is 8,000. So 400 plus 300 plus 1,200 on 8,000. 1,900 on 8,000. This would be the rate of flux. So you will see that it will come out to be 5% plus 3.75%. And if 1,200 I calculate on 8,000 new accessions, it is 15%. So this will come out to be 23.75%. Okay. Three hundred divided by 8,000 was 3.75. And so I hope this has made the revision possible for what was labor turnover. Right. We next talked about the incentive plans also, from which we will continue our sessions. So I'll recall, uh, first was the healthy plan. It said that pay the worker bonus on time basis. How we will pay the bonus? 50% of time saved into hourly rate. So in healthy plan, the actual hours into hourly rate would be paid plus 50% bonus will also be paid of time saved into hourly rate. Then we also talked about proven plan, which provides bonus on the basis of a proportion. What is the proportion? Proportion is how much time was saved on standard hours. This proportion is applied to the wages he has earned on time rate. Time saved is always equal to what should be the standard hours to do the job minus how much actual hours have been spent. So if this is positive, this is the time saved. So Rowan plan also says actual hours into hourly rate plus time saved on standard hours as a proportion will be applied to the actual wages he has earned on time rate. So the difference between the two is healthy plan keeps on increasing the bonus as in when the time saved keeps on increasing because it applies the bonus on time saved. So if the job is of 10 hours, as an example, standard hours are 10 and actual hours are 8, then time saved is 2 hours. So the bonus will be for 2 hours. However, if standard hours are 10 and actual hours are 2, the bonus would be substantial. It would be for 8 hours. However, in Rowan plan, as the bonus is applied as a proportion of time saved on standard hours, so in Rowan plan also you will see that 2 by 10 is 20%. So in this case, let's say this is case A and this is case B. So in case A, the bonus is 20% of actual wages. Actual wages on time basis. Whereas in B, it is 80% on actual wages. Because this proportion, 20% or 80% is applicable on actual hours into hourly rate. So here you get 20%, here you get 80%, substantially more. But this 20% is applicable on 8 into hourly rate. Whereas this 80% will be applicable on 2 into hourly rate, right? So the 80% is applied on only 2 hours. So it's only 1.6 hour. Whereas 20% is applied on 8 hour. So this is also 1.6 hour. So in both the cases, the bonus is same. The bonus has not increased. So the bonus keeps on increasing till the actual hours are 50% of the time standard hours. Or we can say that actual hours and time saved are exactly equal, 50-50. Beyond this, Rowan plan starts decreasing the wage rate. So in a sense, it helps the workers to work, motivates them to work hard, to save more time, but at the same time, not at the cost of quality or deteriorating the material or the machines. So therefore, the workers also know that beyond a certain point, they will not get very much bonus. So they also keep increasing their output, ensuring that the quality is maintained. So in that sense, we can say that Halsey plan is better than the Rowan plan. What would happen if the time saved comes in the negative figure and deducting after deducting? Okay. Uh, One more aspect that I like to explain here is bonus is paid only when there is saving in time, when time is saved. So that means actual hours should be less than standard hours. So let's take an example here. If the standard hours to do a job is 10 hours and actual hours are 8 hours and the hourly rate is, let's say, rupees 100. So there is a time saving of 2 hours. So under Halsey plan, the worker will be paid how much? Actual hours worked, 8 hours into 100. This is what he is being guaranteed under the time rate plus a bonus, 50% of the time saved, 2 hours into 100. So 800 plus 100, he ends up getting 900. Now, if you say actual hours are more than standard hours, that means time saved is 0. Then the bonus under both Halsey and Rowan plan is also nil. So let's say if the actual hours taken were 12, then the worker would be paid actual hours into hourly rate. Actual hours is 12 and 12 into 100, he will end up getting 1200 rupees. When you do this kind of a calculation, you start to compare 900 with 1200 rupees and you end up maybe thinking that what is the benefit of saving the time when the worker who's taking more time, 12 hours, he is being paid more. But you will see that the effective hourly rate for worker would be higher here. That means he has earned 900 rupees in 8 hours. So he is effectively getting 112.50 rupee per hour. Whereas this person is getting, worker B, 1200 on 12 hours. He ends up getting only the hourly rate of 100 rupee per hour. Okay. So effectively, he has been able to generate effective hourly rate at a higher rate. So who's stopping this worker to work for not 8 hours but 12 hours? So in another 4 hours, if this worker works for 12 hours at 112.5 into 12, he will end up getting 1350. Okay. So his total wages will be higher if this worker worked for 12 hours, right? So don't compare 900 with 1200. You have to compare the effective hourly rate for each worker to see whether the bonus is helping him generate more wages. So if actual hours taken are more, then he doesn't get any bonus. He will only be paid the time rate, both under the Halsey and the Rowan plan. Only time rate, zero bonus, no bonus. Is it clear? If there is no work, zero output. Even if the output is zero, because he has spent some time in the entity or the organization or the factory, he is getting the hourly rate, the actual hours that he has put in multiplied by the hourly rate. But how long can a worker survive in a factory or an entity without generating any output? Okay. So basis this question, Halsey and Rubin plan, you might get some questions here. Like let's look at this one. There are two workers, A and B. They produce some product using the same material. So there are two workers, worker A and worker B. Both are making some output using the same material, and the wage rate, the rate at which they are paid, this is also same. However, A is paid according to the Rowan scheme and B is paid according to the Halsey scheme. So far what we are saying is they use the same material, they are paid at the same hourly rate. However, the incentive scheme that is applicable to worker A and worker B, that is different. A will be paid according to the Rubin plan and B will be paid according to the Halsey plan. The time allowed to make the product is 50 hours. So standard hours are mentioned here. How much time should this output be produced in? The standard hours is 50 hours. A takes 30 hours while B takes 40 hours to complete the product. So you can say standard hours are 50. For A, actual hours are 30. And that means A had saved 20 hours of time. For B, standard hours are 50. Actual hours are 40. Therefore, B has saved 10 hours. There is also a overhead which is applicable. The factory overhead rate is 5 rupee per person hour actually worked. What is overhead? That means the sum cost which is always incurred over and above the basic raw material and the labor. So, for example, the laborers will be working in some place. There, the electricity would be used, the machines would be running. So, all this would be there, and this will be the overhead. These are the cost which is over and above the material and labor. So let's say 5 is directly related to the electricity consumed when the workers are working. So this electricity consumption will be for 30 hours for A and 40 hours for B, which means 30 into 5, 150 hours would be the overhead rate, and 40 into 5, 200 rupees would be the overhead cost for worker B. So they will also cause extra overheads when they are taking longer. And the factory cost of product manufactured by A is 3490 and for the product manufactured by B is 3600. You are supposed to calculate the normal rate of wages. How much is the material cost? And we have to prepare a statement comparing the factory cost of the product as made by the two workers. So here we know that there are two workers A and B, both being paid at the same normal rate of wages but under different plans, same material cost, and they have taken different time to complete the job. Therefore, the factory cost is a little different. It's 3490 for A and 3600 for B. So let's see how we will calculate the normal rate of wages, the material cost, and how we will compare the factory cost of the product as made by the two workers. First, we'll have to assume let the material cost used by both the workers, which is same, is X. And let the hourly rate applicable to the two workers, which is again same, is rupee Y per hour. So let's make a table comparing the factory cost. When you talk about factory cost is direct material plus direct wages, and if there are any direct expenses like royalty, etc., all these are added. This becomes your prime cost. And on this overheads, manufacturing overheads or works overhead, when you add this, whatever it is, factory overheads, you end up getting factory cost. So in this question, we have the material, we have the wages. There is nothing like direct expenses here in this information, but we have factory overheads at the rate of 5 rupee for actual hours worked. So material we don't know for A and B. So direct material used is assumed to be X rupees and X rupees. Direct wages we don't know, but for A, standard hours 50, actual hours 30, applicable scheme row 1. For B also, because B has also done the same job, standard hours 50, actual hours 40. B has taken 10 hours extra and he is under the health scheme. So if we don't know the wage rate, we have assumed it to be Y. If a person is under the row 1 scheme, what will be his actual wages if he has taken 30 hours? 30 hours at the rate of Y rupee per hour, time saved 50 minus 30, 20 hours, and the person is under the row 1 scheme. I'm giving you 1 minute to calculate the wages of this worker together with bonus. Actual hours into hourly rate plus time saved divided by standard hours multiplied by actual hours into hourly rate. So actual hours are 30, hourly rate is Y, 30Y, plus there would be some bonus. Bonus would be 20 on 50. So it's 40% bonus of 30Y. 30Y plus 40% of 30Y, 12Y. So the total wages paid to the worker is 42Y. This will be your working note for worker A. For worker B, 40 hours at the rate of Y rupee per hour. Time saved for him will be 50 minus 40, 10 hours, and he is under LC scheme. Right. So his wages would be actual hours into hourly rate plus 50% of time saved into hourly rate. So he ends up getting 40y plus how much are saved? 10. So 50% of or 1 by 2 of 10y. This becomes 45y. So wages are, material is x and x. Wages are 42y and 45y. They are both paid at the same rate, but because the time taken by both the workers is different and they are under different schemes, therefore packages are different. This gives you the prime cost. And on this prime cost, when you will add factory overheads, at the rate of 5 rupee per hour worked. So as A has taken 30 hours, this will be 150 rupees. 30 into 5. And for B, it will be 200 rupees. 40 into 5. And therefore, the factory overheads, the factory cost will be calculated after applying the factory overheads, but which is given in the question as 3490 and 3600. Okay. Is it clear? This cost is given in the question. The factory cost is 3490 for A and 3600 for B. Now we will solve for X and Y. We will get two equations and two variables, if you will see. And we'll solve it in the form of linear equation mathematically. Two variables, two linear equations. You will get the answer for both X and Y. Okay. I hope it is clear so far. So first equation is X plus 42y plus 150 is equal to 3490. This is your first equation. And the second equation is X plus 45y plus 200 is equal to 3600. So this becomes X plus 42y is equal to 3490 minus 150, 3340. And X plus 45y is equal to 3400. So when you will subtract the two equations, you will get minus 3y is equal to minus 60, and therefore y is equal to 20 rupee per hour. So that means the workers are paid at the rate of 20 rupee per hour. Right. So when you will put in any of the equation, x plus 20 into 42 is equal to 3340, you will get how much material is used. The cost of raw material comes out to be 2,500 rupees. Okay. You can verify this answer. This is the best part of this type of questions. You can always verify. 2,500. Payment is at the rate of 20 rupee per hour. So 30 into 20 plus how many hours saved? 20 hours saved. 20 on 50 multiplied by 30 into 20. 600 plus 40% of 600, 240. Worker B gets 40 into 20, that means 800 plus 10 hours saved. So 10 into 20, money saved is 200 and 50% of 200, 1 by 2 of 200 is 100. So 800 plus 100, worker B will get the wages as 900. 840 and here we have 900. So this becomes 3340 and this becomes 3400. If we will add 150, this will become 3490. So that means your answer is perfect. 3400 plus 200, 3600. So you can also verify your answer, right? So I hope this question is clear. So first part, what is the normal rate of wages? It's 20 rupee per hour. What is the material cost? Comes out to be 2500. And you can prepare a statement comparing the factory cost of the product as made by the two workers. So you can finally prepare the statement of factory cost using the X as 2500 and hourly rate as 20 rupee per hour. And this is how we can compare. So since A has saved time, more time, so the overhead cost was less, as well as he was under the proven scheme. So the benefit of the extra 10 hours saved was a little, not very high. He only could get 840, whereas worker B, who was in Halsey plan, though he was under the Halsey plan, though he saved only 10 hours, his wages were 900. Higher because of actual hours taken were more. So he was guaranteed the time rate for extra 10 hours. Plus the bonus was as per Halsey plan. Okay, I'll explain it once more. So the question is, there are two workers, A and B, who are both using the same raw material, which we don't know how much, and they are being paid at the same hourly rate. So, but A takes 30 hours. So let's say the hourly rate is Y rupee per hour. So he will be paid 30Y, and because B takes 40 hours, he will be paid 40Y. But there is one more information that the standard hours to do the job is 50. So indirectly, we can say that A has saved 20 hours and B has saved 10 hours. Because A has taken 30 hours and B has taken 40 hours. So the time saved by A is 20 hours and B has saved 10 hours. And they are not paid hourly rate, time rate. They are under a incentive scheme. And this incentive schemes allows them some bonus. So the incentive scheme applicable to A is Rowan scheme. How does Rowan pay a bonus? Time saved divided by standard time or standard hours. This proportion is applicable to actual wages. So 40% of or 20 by 50, 2 by 5 of 30 is 12Y. So he will be paid not just 30Y, but a bonus of 12Y. Similarly, B, who takes 40 hours, will be paid 40Y, but for the time saved, that is 10 hours, he will be paid bonus and he is paid as per the LC scheme. So 10 hours into hourly rate, which we don't know, that is Y. Half of this will be paid to the worker B as bonus. So 40Y plus 5Y. And the factory cost is made up of three components: material, labor, and factory overheads. Overheads is said that it is rupee 5 for actual hours worked. So this will be 30 into 5 for worker A and 40 into 5 for worker 2. This gives you the total factory cost 3490. So you will bifurcate while presenting the statement. First you will speak about prime cost, then add factory overheads, and then we'll give you factory cost. 3600. So when you have two variables and two equations. So this becomes x plus 42y plus 150 is equal to 3490. And the second equation is x plus 45y plus 200 is equal to 3600. So if we'll take 150, subtract 150 from both sides, in the first equation, you will have x plus 42y is equal to 3340. And you'll subtract 200 from both sides in equation 2. X plus 45y is equal to 3400. So when you will solve these two equations, as x is same, you can subtract the equation 2 from equation 1. You have minus 3y, 45 minus 42, is equal to 3400 minus 3340, that is minus 60. So as the negative is on both sides, 3y is equal to 60 and y is equal to 20 rupee per hour. So the hourly rate has come out to be 20 rupee per hour. When you will put 20 in any of the two equations, 20 into 42 is 840. 840 plus 150, 990. When 990 is subtracted from here, x becomes 2500. So you get the raw material cost 2500, hourly rate 20 rupee per hour, and the statement of factory cost can be prepared like this: material cost plus wages, prime cost plus factory overheads is equal to factory cost 3490. Um, Bhavani and then Shri, I guess it's clear now. Yeah, thank you. Similar on health plan, let's do one more question. There is a skilled worker in XYZ Limited, and he is paid a guaranteed wage rate of 30 rupee per hour. The standard time per unit for a particular product is 4 hours. So here the wage rate per hour is given, hourly rate, and the standard hours are also given, 4. P is a machine man. He was paid under the Rowan scheme and earned a effective hourly rate of 37.50. So there is a worker P, machine man or worker P, to whom the applicable scheme is Rowan scheme. And as per that, his effective hourly rate comes out to be 37.50. So your question is, what would have his been total earnings and effective hourly rate had he been put on the health incentive scheme 50%? Okay. So what is given? Standard hours are given. hourly rate is given and effective hourly rate is given. What is not given is actual hours. So first we'll prepare a working note. Let us say actual hours or actual time taken is X. So if someone who has taken X hours to do the job under the Rowan scheme, his wages would be total wages. 30X because the hourly rate is 30. So actual hour is X and 30 is the hourly rate. So his total wages would be based on time rate first 30X plus there would be some bonus. Bonus would be time saved. Now, instead of writing time saved and introducing a third variable, a second variable, I would rather say time saved is equal to standard hours minus actual hours. Standard hours are mentioned as 4 and actual hours we have assumed as X. So time saved is 4 minus X, right? And divide by standard hours, which is 4. This will be applicable to 30X. This becomes his total wages. And from total wages, if I want to calculate the effective hourly wages, I'll divide the entire equation by X. So this is the total wages, 30X plus 4 minus X by 4 multiplied by 30X. These are the total wages. When the total wages are divided by X hours, you get the effective hourly wage rate. And that is mentioned in the question as 37.50. Okay. So this X can move here, or if we can also say directly that if your effective hourly wages are 37.5 and you have taken X hours, so your total wages are 37.5X. So I can equate total wages to 37.50X. Or if you first calculate the effective wage rate, this is the equation. And when X will move here, you get the same thing, right? So this is the equation that we need. Total wages is equal to 30X plus time saved upon standard hours. Time saved is 4 minus X multiplied by actual wages, time rate wages, which is 30X. So the total wages comes out to be 37.50X. Now, if you look at this equation carefully, we don't have to do it as a quadratic. You can see this term has an X, this term has an X, and this term has an X in multiplication. So you can divide the entire equation by X and you'll end up getting a simple equation 30 plus 4 minus X upon X into 30 is equal to 37.50. So this will become 4 minus X upon X into 30 is equal to 37.50 minus 30. So 4 minus X upon X into 30 is equivalent to 7.50. When this 30 will move here, you will see that this is also 7.5 on 30 will become 1 by 4. So 4 minus X upon X is equivalent to 1 by 4. We can solve it further. Y 30X. Okay, Y 30X. So 30X because he has taken X hours and the hourly rate is 30 rupee per hour. Just Agarwal has raised his hand. Just can you type it in the chat window? Otherwise, y will be divided by x. So y 30x is clear. And y we will divide it by x to find out the effective hourly rate. So x hours is what he has taken. X hours are the actual hours. So if you get a total wages of 1000 in 10 hours, the hourly rate would be 1000 divided by 10. Please explain it again. Okay. There is a skilled worker. He's paid a guaranteed wage rate of 30 rupee per hour. So what is the information? Always when you are approaching any question, try to figure out what is given in the question relevant to your need. So what is given is hourly rate, 30 rupee per hour. What is the standard time to produce 1 unit? Standard hours are given as 4 hours. What is the scheme applicable to the worker? Rowan scheme. So once you know that Rowan scheme is applicable or Rowan incentive plan is applicable, use the formula immediately for Rowan scheme. That means his wages would be actual hours into hourly rate plus time saved. Instead of time saved, I can write standard hours minus actual hours upon standard hours into hourly wages. So AH actual hours into hourly rate. Okay. I hope this is clear. AH into AR is what I have written here. Where the X is gone. Confused in step 4. Okay. So I'm repeating. Actual hours, hourly rate is given. Standard hours are given. Rowan scheme is applicable. I've written the formula for the Rowan scheme. And he's saying the effective hourly rate is 37.50. Okay. Now in this question, everything is given to us. What is missing is we don't know how much time did he actually take. So actual hours are missing. But there is one extra information, and that is that this worker has been paid, whatever has been paid, effectively his hours are, hourly rate turns out to be 37.50. Okay. So before I take up this, let me take an example. So if the standard hours were 10, actual hours were 8, time saved would be 2. And if the hourly rate is 100 rupees, under Rowan scheme, total wages of this worker would be 8 into 100 plus time saved 2. Instead of time save, I can write 10 minus 8 instead of 2. 10 minus 8 upon standard time 10 multiplied by actual hours into hourly rate. So this would have been the total wages. Similarly, in the given case, standard hours are given as 4. Actual hours is what is missing. This is a question mark. Time saved, therefore, is automatically missing, but we can say 4 minus the question mark. Let's say question mark is X. Hourly rate is given 30. So everything is given, but one information is missing. And unless we find out this information, we cannot calculate the actual wages. Apply this here. So his total wages will be 30x, x into 30 or 30x, plus time saved this time is 4 minus x, divide by standard hours is 4, and multiplied by 30x. These are his total wages. Now, if you want to find out effective hourly rate, what would you do? You would divide the entire wages by actual hours taken. So, in this case, it would be 800 plus 20% of 800, 160, divide by 8. So, how will you get the effective hours? 960 on 8. 120 rupee per hour. Or if you know that 120 rupee is the effective hourly rate, and you multiply by the actual hours taken, which implies 120 into 8, you will get the total wages, right? 960. So these are the total wages of the worker, either, and we know what is the effective hourly rate. So either you can say 37.5 into actual hours X. You can equate it like this, or you can go a step further, 30x plus 4 minus x upon 4 into 30x is the total wages. And when this is divided by x hours, your effective hourly wage comes out to be 37.5 rupee per hour. So here also this x will move to the left side of the equation. 37.5x is equivalent to 30x plus 4.5, 4 minus x upon 4 into 30x. Divide the entire equation by x. This was the step that will eliminate it being a quadratic. I'll take a different color here. So 37.5 x divided by x is equal to 37.5. 30x divided by x is equivalent to 30 plus 4.4 minus x by 4 divided by x. So this x will go. 4 minus x upon 4 will remain, and you will have 30 in the right. So it makes it simple. Then you have 37.5 minus 30. So you have 7.5 is equivalent to 4 minus x upon 4 into 30. Now, if you bring this 30 here, 7.5, divide both sides by 30. Right? 7.5 on 30 is also 1 by 4. So you can eliminate the LCM or the denominator on both sides. Okay, so 4 minus x is equal to 1. Therefore, x is equal to 4 minus 1, 3. So let's work backwards. So that means actual hours taken are 3. So when 3 hours are taken, think about it. Actual hours 3, standard hours 4, hourly rate 30 rupee per hour, and the person is under row 1 plan. So how will we calculate his wages? 3 into 30 plus time saved is 1 hour. 1 on 4, that means 25% of 30 into 3 into 30. 90 plus 1 by 4 of 90. 90 plus 22.5, 112.5 is what he earns as total wages in 3 hours. So what is his effective hourly rate? right? You can verify the answer. Now I'm giving you any doubts. Now I get it. Fine. Okay. Now the question is not solved. This was only a working note to find out how many actual hours because was missing question. The ultimate question is what would have been his total earnings and effective hourly rate? Two parts. Total earnings and effective hourly rate if we change one thing, not Rowan plan, but health plan. So if this Rowan changes to health plan, what would be the total earnings and what would be the hourly rate, effective hourly rate for this particular worker? Giving you 1 minute to solve it. Use this information, but apply the HALSE incentive plan. Once again, 3 into 30, 90 is what is guaranteed, but half of time saved into hourly rate. So basically, by saving 1 hour, he saved the management 30 rupees. Half of that would be given to him. So 90 plus 15, he ends up getting 105. So his total earnings under the health plan would be 105. And what would be the hourly rate? Effective hourly rate for Mr. P if he had been under the health plan? 105 if you are earning in 3 hours. It means your effective hourly rate is effective hourly rate under health plan would have been 105 on 3, 35 rupee per hour. Okay. Perfect. 335 Arpita is not something. I hope it is clear. All right, team, one more important information before I proceed. If you get a question on health incentive plan, it is possible that it must be given 50%, but if a specific percentage is allotted, health incentive plan with 40%, then you will apply only not 1/2, but 40% of 30. And there was a company where limited or where company, this applied a healthy plan, but they changed the percentage to 30%. So they passed on the benefit to the worker 30% and kept 70% with themselves, thinking that it is their resources which have been used so that the worker is able to save the time. Okay, so this was the scheme. Now I'll take one more question based on health and revenue. There is Mr. A working by employing 10 skilled workers. Considering the introduction of some incentive scheme, either health or bonus. So the question is about taking a decision that whether you want to implement a health plan or a Rowan plan for all the 10 workers. There are 10 workers, so you are going to take this decision regarding the 10 workers, whether we want to apply the health plan or the Rowan plan. So we want to apply an incentive plan of wage payment for increasing the labor productivity. We want to increase the labor productivity so that we can cope up with the increased demand for the product by 25%. What do we want? That the productivity has to increase by 25%. There is an increased demand for the product. So workers should get a benefit so that they get motivated as seasonally, they become more productive so that the productivity increases by at least 25% to meet the increasing demand. Okay. There's a request to show the previous screen. I'm doing that. You can quickly take note of it. Coming back, A is working, having 10 skilled workers. He's thinking whether to employ Healthy plan or Rowan plan because there is an increased demand for the product by 25%. So he feels that if the proposed incentive scheme could bring about an average even 20% increase of the present earnings of the workers, they will get sufficient incentive and they will produce more than, and he will be accordingly getting a 25% productivity. But he has assured his workers that there would be at least an increase of 20%. So he feels that if the proposed incentive scheme could bring about an average of 20% increase over the present earnings of the worker, it could act as a sufficient incentive for them to produce more, and he has accordingly given the assurance to the workers. So firstly, there are 10 workers. We are thinking of employing Halsey and Rowan, but we have guaranteed that this will increase the incentives or their wages by at least 12%, 20%. And he thinks if this is what I guarantee, they will give me a productivity of more than 25%. As a result of the assurance, there was increase in productivity, and this is the figures revealed by the current month. Important informations from here is hourly rate 2, average time to produce one piece by one worker at the previous performance 2 hours. Standard hours to do one piece 2 hours. How many number of working days are there in the month? 25. Each day the worker is working for how many hours? 8. So each worker is working for 25 into 8, 200 hours in a month, and there are 10 workers. So 10 workers working 25 days for 8 hours every day is equivalent to 2000 hours. And actual production during the month is 1250 units. So if one unit takes 2 hours, how many units should be produced in 2000 hours? Use the unitary rule. 2 hours is equivalent to 1 unit. So there is a direct relation, more hours, more units. That means 1 hour is equivalent to 1 by 2 units, half unit. And 2000 hours is equivalent to 1 by 2 into 2000. 1000 units should have been produced by the workers. 1000 units. And they produced 1250 units. Did the management achieve the objective of 25% productivity increase? So earlier they would have produced only 1000 units. Now they're producing 25% more, 1250 units. Yes. So because the workers were given an incentive, that will give you an incentive. Yeah, I am taking a few important questions which are of different types, which are already previous year questions as well. So the management was able to achieve the incentive objective of 25% productivity. Now we see whether the worker is under the HELSE plan or under the Ruben plan. So if he is under the HELSE plan, he will be paid 2000 hours is what he has worked, and so this is the workers are being paid whatever already. Earlier, they would have been paid for 2000 hours without any incentive scheme. So calculate the effective rate of earnings per hour under the HELSE scheme and the Rowan scheme. The hourly rate of wages guaranteed is rupee 2 per hour. Okay. So once again, I'll repeat the question, read it, and you will be able to understand. Mr. A is working by employing 10 skilled workers. Considering the introduction of incentive scheme, either HELSE with 50% or Rowan of wage payment for increasing the productivity to cope with the increased demand of product by 25%. He feels that if the proposed incentive scheme could bring about an average 20% increase over the present earnings of the workers, it could act as a sufficient incentive for them to produce more, and he has accordingly given his assurance to the workers. As a result of the assurance, there was increase in productivity and has been observed as revealed by the following figures for the current month. The guaranteed hourly rate was 2. So if they work for 2000 hours, because the factory has 25 days, 8 hours every day for the 10 workers. So the men hours were 2000. And if they are getting only the time rate, their existing wages would have been 2000 into 2, that is 4000 rupees only. But he has said that I guarantee you will get 20%, at least 20% more. So give me more production. So based on this, the workers were actually able to produce 1250 units. Otherwise, if they had worked at the standard rate, they would have produced only 1000 units, which means that 25% productivity is achieved. So we have to calculate the effective rate of earnings per hour under the HELSE and Rowan scheme. So if he was paid HELSE actual hours into hourly rate, which is 2, plus a bonus. Bonus would be time saved into hourly rate. Now, how do we know the time saved? Half of this will go to the workers. Time saved will be calculated now by finding out the standard hours for 1250 units. So as it takes 2 hours to produce 1 unit, 1250 into 2 will be 2500 hours. So the job which the workers have done in 2000 hours, the standard hours to do the same job is 2500 hours. Sometimes it can be given standard hours are this and actual hours taken are this. And sometimes it can be given in form of output. So when it is given in the form of output, you have to find out how many standard hours it would have taken to generate the same output. So hours saved are 500. So we are going to give half of 500 into 2. So the workers end up getting 4000 plus 500. So the worker ends up getting 4500 rupees in 2000 hours. And their effective hourly rate would be 2.50, 2.25, sorry. So instead of 2 rupee per hour, they end up getting 2.25 rupee per hour. If they had been under the Rowan scheme, 2000 into 2 would have been guaranteed to them. Plus, time saved is 500. Standard hours to do the same job is 2500. So they end up getting 1/5, 20% of the bonus of 2,000 into 2. 4,000 plus 1/5 of 4,000, that is 800. 4,800 rupees. Total wages and effective hourly rate. And 48,000. And the effective hourly rate would be 4,800 by 2,000, 2.4 rupee per hour. So these are the two answers, but which one will be applicable? We have to take a decision. Both the incentive plans are able to increase the productivity by 25%. Productivity has definitely gone up. But there was one more thing, that the management has given an assurance to the workers of at least 20% increase. Is this a 20% increase? No, 0.25. It's only 12.5% increase. This is not the assurance has not been fulfilled here. So here, if you apply the healthy plan, the workers would feel cheated. Here, is it 20%? Yes, 40 paisa extra on 2 rupees, that is 20%. So here, under the Rowan plan, the scheme is fulfilled. Therefore, the applicable scheme would be the Rowan plan. Okay, clear? So two objectives were required. Once productivity is required to be increased, and the second is that we want the average assurance to the worker has been given that the wages will increase by at least 20%. So on 2 rupees, if you want to say there would be a 20% increase, the minimum they would want is 2.40 per hour, which is achieved under the Rowan scheme, not under the health aid. So we will apply Rowan scheme to the workers. Okay. Team, I'll give you a break here for 10 minutes. And after that, I'll take up the study material case study related to this. Okay? team. I hope all of you are back after the break. So I wanted to discuss with you the case scenario which is there. The board of J Limited has been appraised by the general manager HR that the employee attrition rate in the company has increased. So attrition means that the employees are leaving. So we are going to think about that the labor turnover should not be there. So we are worried about it and we have to take care of that. The following facts has been presented by the general manager HR, which says that the training period for the new recruits was 50,000 hours. And during this period, the productivity is 60% of the experienced workers. So there were 50,000 hours during which the workers were only 60% productive. So from here, we can say that 50,000 into 60%, that means the output that was achieved was only of 30,000 hours. And that means 20,000 hours are lost here. The time required by an experienced worker is 10 hours per unit. So if one worker takes 10 hours to make a unit, in 50,000 hours, he would have made 5,000 units. So we can say 60% of 5,000, which is equal to 3,000. Okay. So only, whereas 5,000 units should have been produced, only 3,000 units are produced. So we will look at each and every point first in detail, and then we'll go on to approach the case study. So the first point says 50,000 hours were during the training period. And in the training period, the workers were 60% productive. From these two lines, we can make out that only 30,000 hours output was achieved and 20,000 hours are lost. Alternatively, we can say from the third line that time required by an experienced worker is 10 hours per unit. So in 10 hours, 1 unit. In 1 hour, 1 by 10 unit. And so in 50,000 hours, 5,000 units should have been produced, but 60% of 5,000, only 3,000 units were produced. So we can say either that 20,000 hours were lost, or we can say 2,000 units of output was lost. Second point, it says 20% of the output during training period was defective. So 50,000 hours was in the training period. The output they produced during this period is 3,000 units. And out of that 3,000 units also, 20%. 20% of 3,000 becomes 600. 600 units were defective, and the cost of rectifying these defective units comes out to be 25. So 600 into 25. 15,000 would be the cost of 600 into 25. Not 2,400 good units, 600 defective units, but defective units are reworked. So we have talked in material, there is scrap, there is spoilage, there is defective, and there is wastage. Wastage is something that will evaporate in the atmosphere. You will not be able to collect it. For example, if you keep kerosene, it will evaporate with time. So that's wasted. Let's take an example of a wooden plank. If a carpenter is rubbing that, he will get some wooden scrapes. So those scrapings is scrap. Whereas some part of the wooden particles would be lost in the atmosphere. That's wastage. You cannot collect it. Scrap is something you can collect with the wooden shavings. So if you even sharpen your pencil, the shavings that you get, that is a scrap. That will be the scrap. You can collect. But whatever is lost in the atmosphere, that's wasted. You cannot avoid it. So, and defective is something which can be rectified. It will cost you for rework, but it can be rectified. Spoilage means nothing can be done about it. So it has some problem. It will be sold as like that, maybe at a discount. So coming back to the case scenario, second point says 20% of the training period output was defective. Now, in the first point, we have found out that the output was 3,000 units. 20% defective means 600 units defective, and 600 units would cost 15,000. 600 into 25. So we have seen 20,000 hours lost here, and potential productive hours also lost due to delay in recruitment is 100,000. So 100,000 plus 20,000, total productive hours lost are 1,20,000 so far. Selling price is 180, and the PV ratio on this is 20%, which means 36 rupee per unit is what you get. So if you have lost 2,000 units here, 2,000 into 36 is a loss, pure loss, plus another 15,000 on rectification. Apart from this, there are settlement cost 183,480, recruitment cost 156,340, and training cost 113,180. So if we have the crux of all this, we have understood that 20,000 hours are lost because on training period and 100,000 lost because delay in recruitment. Total 1,20,000 hours lost. And if you take 10 hours to make a unit, 12,000 potentially productive units were not produced. Because in training period, 3,000 units were produced, 2,000 were lost. And out of those 3,000, 600 were defective, which were recorrected with the cost of 15,000. Right. And total, that means 10,000 here and 2,000 there, 12,000 units into 36 RR is our profit foregone. Apart from that, settlement, recruitment, and training cost. So based on this, there are some questions here. You being an associate finance to general manager HR, you're asked the following questions. How many quantity of output is lost due to labor turnover? Can you give me the answer to that? Total. 100,000 lost here. Hours, which means 10,000 units, and 40% of 50,000. 20,000 hours lost here, that means 2,000 units. So 12,000 is the right answer. Good. How much loss in the form of contribution the company incurred due to labor turnover? Profit foregone. 12,000 units is the lost output. 12,000 into 36 should give you the answer. So what is the answer? You can type in the chat window. 12,000 into 36, 4,32,000. Perfect. Cost of repairing the defective units. So in the training period, 50,000 hours. B. 15,000. This has already been answered in the chat. How? 50,000 hours, 60% productive. That means 30,000 hours. Output in 30,000 hours, 10 hours per unit. That means 3,000 units. And 20% of 3,000 defective, which means 600 defective. And 600 defective is costing us 25 rupee per unit to rectify. 25 into 600 is 15,000. Profit lost by the company due to increased labor turnover. So 432 is this, plus another 15,000 due to repairing the defective units. So this makes it 447. And apart from 447, you will add all the three costs to this. So 4,47,000 profit foregone plus cost in rectifying plus settlement cost of 183,480 plus recruitment cost of 156,340 plus training cost of 113,180. So the total cost comes out to be 900,000. This should be the answer. And finally, how much quantity of output is lost due to inexperience of the new workers? So that means how much quantity of output lost due to in the training period. So we have already calculated it. That's 2000 units. Okay. Any doubt in this? Fine. Let's look at the MCQs. Before MCQs, I'll just take you a little bit towards direct expenses. What are direct expenses? So any expense which is not a material cost or a direct employee cost, but which is important in the manufacturing of the product, not an overhead, but a direct cost, directly traced in a proper manner to a cost object. Like royalty paid, they are not material, they are not labor, but they are direct cost. If a specific equipment is required for a particular product manufacturing and you get it on hire, like a crane or anything, that's higher charges, that is a direct expense. Cost for product or service, which is specific, like a drawing or a rough draft or something or a prototype, that is a direct cost. Specific software, that's a direct cost. Any other expense which is directly related with the production of goods or services. So these are a part of the prime cost. Remember that. PV ratio is profit volume ratio or the contribution, which we had explained in the previous class on labor when we were talking about the settlement. Profit volume ratio, though I had given you a glimpse of that, but when you will be doing the marginal costing chapter, it will be thoroughly clear. Okay, so these are some direct expenses. Let us take up the MCQs from the here. Idle time is the time under which, please give answers. A, B, C, D, what? Full wages are paid to the workers or no productivity is given by the workers, both A and B or what? Okay, most of you are saying C. Yeah. So in time, workers are paid, but they do not generate any output. Cost of time, idle time due to non-availability of raw material is, that means abnormal. Non-availability of raw material is not something a normal circumstance. It should be charged to costing P&L account. Non-availability of raw material. It is not something normal. It should not happen in any organization. It should be charged to costing P&L account. Very rarely this could be your answer, charged to overhead, only when um, it is uncontrollable, like the supply of the raw material is so short and there are so many units or so many players in the industry which require this raw material. It is always a feature that it is always a shortcut in short supply. It's rare that you get, it's always non-available. And you do get, everyone in the industry gets out of stock. Then it can be charged maybe to overhead cost. But otherwise, non-availability of raw material. If you remember, we've done the raw material chapter, material cost. So we have seen that we must keep safety stock, buffer stock. We should not get into stock out situations. And if we do get into stock out situations, that is not something normal. So therefore, anything, any cost which is caused because of abnormality should be charged to costing P&L account. Time and motion study is conducted by which department? Time and motion study conducted by which department? It is about finding out what is the right way to do and what is the what standard hours. So you've seen, we've taken up the Halsey plan, Rubin plan. There we saw that the standard hours to do the job was 10 hours, 2 hours. Who tells us all this? It's a research done by the engineering department, time and motion study. Timekeeping and time booking is just finding out when the worker was in the factory and when did he leave, timekeeping. And within the time when he was in the factory premises, what was he actually doing? On what jobs was he working? So you can have a job card or a worker's card where he will keep a record of this is what I have been doing. That's timekeeping and time booking. But engineering department does the time and motion study to find out what's the best way to do a job, best motion, and what's the standard time in which it should be completed. Like engineering department may find that instead of the workers standing and doing a job, it's better for them to sit down. They'll be more productive. So if they are provided with stools, they will be working better. So that is what engineering department will find. They'll be less fatigued and they'll be able to be more productive. Fourth, identify which of the following does not account for increased labor turnover productivity. What does not account for increasing labor productivity? So if you want to increase labor productivity, should they be satisfied? Yes. Should they be motivated? Yes. Should their turnover be high? No. Okay. If the turnover is high, that means they're constantly leaving and coming. All the employees are on training period. How will they be more productive then? So high labor turnover is not what we want for labor productivity. Labor turnover is measured by number of persons replaced divided by average, or those separated divided by average, or those replaced plus separated plus new divided by number of persons at the beginning plus number of workers at the end of the year. None of the above. Which one? Number of persons replaced divided by average. Is this one of the ways? Yes. Number of persons separated divided by number of persons at the beginning. So at the beginning is wrong here. It has to be at the beginning plus and the end divided by 2, average. Here replaced plus separated can also be taken under flux, but then denominator is again wrong. Number of persons at the beginning plus number of persons at the end divided by 2. Average is to be taken. So average number of workers are to be taken. Neither you can take the workers at the beginning, neither you can take the beginning and end workers both. So it has to be A. Time booking refers to a method wherein timekeeping and time booking. So time booking is about recording how much time the worker spent on a particular job. What will employee cost include? Right, all of the above. Fine. If the time saved is less than 50% of the standard time, wages under Rowan and Halsey plan on comparison, which one gives more? If the time saved is less than 50%. Who gives more? Halsey. It is A. So more wages to worker under Rowan plan than Halsey? No. More wages to more wages to workers under Rowan plan than Halsey. More wages to workers under Halsey plan than Rowan. Equal? None. So what was the rule? At exactly 50%, both Halsey and Rowan gave same, beyond which Rowan gives less. So before that, Rowan gives more. It's not Halsey, it's Rowan. You can always, if you have this type of question, you can always do a quick calculation. Assume 10 hours to be the standard hours, actual hours 8, and time, hourly rate 100. So Halsey will get how much? 200, 50% of 200, 100. Whereas in Rowan, what would be the bonus? We're talking about only the bonus, right? Or the total wages. So if the bonus is more, the total wages will also be more. So under Rowan plan, it will be 2 by 10, 20% of 800, which is 160. So Halsey is giving 100, but Rowan is giving 160. So row 1 gives more wages under the plan when the wage time saved is 50% of the standard time. Okay. So more wages to workers under row 1 plan than under the health plan. The standard time for a job is 60 hours and the guaranteed time rate is 0.30 per hour. Calculate the wages of the worker under the Rowan plan if he completes in 48 hours. Calculate it. I'm giving you 1 minute. 18 is the normal wages. 48 into 0.3 is the normal wages plus bonus. So 14.4 normal wages plus bonus. How much will be the bonus? 2.88. 14.4 plus 2.88. Yeah, 17.28 is the right answer. So which one is the closest? Yeah, we have exact 17.28. B is the right answer under Rowan plan. Had they been in under Halsey, it's very easy to calculate. How many hours saved? 12. 12 into 0.3, 3.6. Half of it, 1.8. So here also you can see the plan bonus under Halsey plan is 1.8, whereas under Rowan it was 2.88. So Rowan gives more bonus till the actual time is exactly 50% of the standard. Had this been 30 hours, they would have got the same bonus. And beyond 30, Halsey will give more, Rowan will give less. Reason is Halsey applies it on time saved. Rowan applies it on actual wages or actual hours. So for Rowan, even if when initially the proportion is small, actual wages are high. And when the later stages, even when the proportion is high, like 80% bonus, 90% bonus, because time saved is very high, but it is applicable on a smaller figure or a smaller amount. So the bonus does not keeps on increasing. Important factors for control of employee cost can be yes, D, all of the above. Yes, Lohit, very good. All of the above. Yeah, Shushmita. Lohit and Shushmita have given the answer. What about others? Next. Out of the following methods, attendance is marked by recognizing an employee based on physical and behavioral aspect traits. So we are talking about here time keeping. How do the employees' attendance gets recorded? So earlier there used to be token method or a register used to be kept, and the worker would come and sign on the register. Let's say 9 o'clock is the time for the factory. They would keep a register, and at exactly 9 o'clock, maybe they'll change the register. So now whosoever is signing the register definitely are coming late. Okay. But nowadays we have modern methods. You use your fingerprints, you use your mobile phone catches your retina readings and your eyes to ensure that you have the authority to use the mobile or so. So this is all called biometric. Last, if overtime is required for meeting urgent orders, the overtime premium should be charged as urgent orders. It's on request of the customer. The answer should be A, right? So yes, Arun, Lohit, Gayatri, good. So these were the objective types, and we have very few, 2, 3 questions only, practical problems. I'm sure you will be able to manage them. Okay. One small aspect that is remaining from labor is how do you treat this is the same question which we discussed with different figures. You will be able to manage this. Turnover, I'm sure you will be able to manage. What I'm talking about, efficiency calculation, time allowed divided by time taken into 100, and productivity can be like in terms of output. Okay. So holiday and leave wages, how do you account for that? There can be different types of holiday and leave wages. For example, they can be earned leaves, they can be casual leaves. Question 8, you mean to say, Akhila, the objective type? If the time saved is less than 50% of the standard time, then the wages under Rowan and Halsey plan on comparison gives what? So do this, solve this question. Ninth, 60 hours is the standard time, 48 hours is the actual time. So time saved is 12 hours, and 12 hours is less than 50% of 30, standard time. 50% of standard time would be 30, and we have saved only 12 hours. 12 hours is less than 30. So this question number 9 is kind of an example of question number 8, a proof, right? So in this example also, the time saved is less than 50% of the standard time. Then when you calculate the wages under the row 1 plan, how much is the wages? 17.28. This was the answer. 48 into zero point 0.3 plus 12 by 60 of the actual wages, 48 into zero point 0.3. 48 into zero point 0.3 is 14.44, and 12 by 60 or 1/5 of 14.4 is 2.88. So 14.44 plus 2.28, 2.88 is 17.28. These are the wages under the Rowan plan. In the same question, if you had calculated the wages under the Halsey plan, 48 into zero point 0.3, 14.4 plus 12 into point half of 12 into 0.3. 12 into 0.3 is 3.6. Half of 3.6 is 1.8. So 14.4 plus 1.8. So it would be 16.2 something. Who's giving more wages? Rowan is giving more wages. So here are the 4 answers. More wages to workers under Rowan than Halsey? Yes, it was more wages under Rowan than Halsey. So A is the correct answer. They did not get equal wages. The wages under Halsey plan is less. Therefore, A is the answer. Akhila, is it clear now? Case scenario 2 again. Case scenario 2 again. Okay. Case scenario mean the case study. I think you'll spend time, you will be able to make do this. So case scenarios are 50,000 hours, 60% productive. That means 20,000 hours lost. One unit takes 10 hours to make, so 2,000 units are lost. So technically 5,000 units should have been produced, but 3,000 are produced and 2,000 are lost. And out of that 3,000 also, 20% were defective. So 600 units were defective, which were rectified at 25. And apart from that, another 100,000 lost in filling the recruitment. So how much quantity is lost due to labor turnover? 2,000 in the training time and 10,000 because of delay in recruitment, 12,000. How much is the loss in contribution? Each unit is giving us sold for 180, and the PV ratio is 20%, or the profit volume ratio or the contribution percentage is 20%. 20% of 180 is 36. So you are losing 36 rupee on every unit which you could not manufacture. 12,000 into 36 should give you the answer. 4,32,000. Cost of repairing defectives, 600 into 25. Profit foregone, how much total profit foregone? So 12,000 into 36, 432 plus 15,000 plus you have the settlement cost and recruitment and training cost. If we add all three, plus 15 plus 432, it's 9 lakhs. Quantity lost due to inexperience is 2,000. So we were talking about leaves. There could be casual leaves, which means the worker will be paid irrespective of whether he uh, takes these leaves or not. Then there are earned leaves when he will be paid if he does not take the leave. But if he takes the leave, it's okay. His fees payment would not be deducted. Then there are sick leave, which is allowed without deducting the payment if you fall sick, which can even accrue. And there are other leaves which are where the fee payment would be deducted. So if the leaves are availed with full pay, the effective cost to the management is generally higher than what we are showing. So here we have to calculate the employee hourly rate of worker from this data. Basic pay is 10,000, DA is 3,000, fringe benefit is 1,000 per month. Number of working days in a year are 300. 20 days are holidays on full pay in a year and assume 8 hours. So first we will find out how many hours, man hours does a worker put in a year. So out of 300, if 20 days he does not come, that means he's coming only for 280 days and 8 hours per day. So 280 into 8. That means 2240 hours is the output. Okay. So he will be giving an output for 2240 hours, though he will be paid for the entire 300 days. So calculate his annual earnings. 10 plus 3, 13 plus 1, 14. 14,000 into 12 is his yearly earning, 168. And 1,68,000 will be divided by 2240. Not by 300 into 8, not by 2400, but by 2240. So that will give you the effective hourly earnings. Yes, very rightly answered. Navneet, good. I hope it's clear to everyone. Here you cannot do it monthly because your annual days are given 300 and 20 days are availed as holidays in the entire year. So you're working only for 280 days, 280 days, 8 hours each day. So 2240 hours is what you have worked, but you have been paid for full 300 days. 14,000 per month, 14,000 into 12. 1,68,000 divided by 2240 will give you the effective hourly work. Similarly, you will be paid at night shift. Night shift payments can also be for extra. Another question. A worker is paid 10,000 per month. DA is 2,000 per month. He is contributing 10% and employer also contributes the same amount as the employee. Remember, employer also contributes the same amount as employee. So if you remember in the previous session we have done, what will be the cost to the employer? It will be 10,000 plus 2,000 plus another 10%. But what will employee take home? 10,000 plus 2,000 minus 10%. Because 10% employee's contribution will be deducted and will be deposited to the respective fund. Another important thing, though you will be learning in your other subject also, that generally, if nothing is said, the contribution to Provident Fund is 10% of his salary. The salary will include 10,000 as basic as well as the DA. So the 10% will be calculated on 12,000, not on 10,000. For Provident Fund purposes, 2,000 of DA can be taken as part of salary, unless specifically deducted. And then the employee state insurance corporation premium is 6.5% of wages, out of which 1.75% is paid by the employees. So basically, if you look at the Provident Fund is 20%, 10% from employer and 10% from employee. But the ESI contribution is 6.5%, out of which 1.75% is paid by the employees. So 6.5 minus 1.75, 4.75% is what the employer will bear. Okay, 6.5% minus 1.75%, 4.75% is what the employer will pay. So what is the cost to the employer? 2,000, 10,000 plus 2,000 plus 10% of 12,000, which is 1,200, and another 4.75% of 12,000 will be paid by the employer. Apart from this, the firm also pays 2 month wages as bonus. Another amount that the company will pay is 2 months bonus. So what is the total payment? 10,000 into 12, 1,20,000. DNS allowance 2,000 into 12, 24,000. So here in this solution, you can see they have added up both the 144,000. Then you take the PF contribution 10% of 144, ESI premium 4.75% of 144, and 2 months bonus. So this is for 12,000 is every month, and in 2 months, 24,000. So employer has to bear a cost of 189,240. If I ask you to calculate and tell me how much will the employee take home, can you tell me that? Can you do this calculation? What will be the earning of the employee? How much will he be able to take home? Will he be able to take home 14,400? Yes or no? No. Will he be able to take 6,840? No. Will he be able to take the bonus of 2 months? Yes. Apart from this, anything else will you calculate while you're calculating the earnings of the employee or the take home earning money of the employee? How much cash will be paid to the employee? What is the answer for that? I want you to give me that answer. 1,68,000 will not be the right answer, Surinder. 1,68,000 is what appears from here, but employees' contributions from this will be deducted. So 168 is yes, what comes out from here. 144 plus 24 is what he will take. But now his contributions will be deducted. So his contribution is 10% to the PF. 168 minus 14,400. So 1,68,000 minus 14,400. There is only one more thing which you will also deduct. So you will not just deduct 14,400. There is one more thing you have to deduct. 1,68,000 minus 14,400, the PF contribution. 153,600 minus what? Something else also is to be deducted. Employee state insurance premium 1.75%. Perfect. And 1.75% of 14,400 comes 1,44,000 comes out to be 2520. So that will also be deducted. 1,68,000 minus 14,400 PF deduction minus 2,520 ESI deduction. So he ends up taking home 151,080. Perfect. Right? Is it clear, team? He will take up 151,080, not 127,080. Sushmita, is it clear why 151,080? ESI is 2,520 and PF is 14,400. Sushmita, I hope the answer is clear now. It's not 127,080. Okay, great. So 144 is his money. This is employer's contribution, which will be paid to PF. This is employer's contribution, which will go to ESI. Bonus will also be paid to him. So 144 plus 24, 168. But his own contributions will be deducted from here, which is 14,400 for the PF and 1.75%, 2,520 for the ESI. Good. So this is what the worker is finally paid. The cost to the employer from his pocket to the worker. Now, what is the effective hourly rate? The number of working days in a year are 300, 8 hours each. So 300 into 8 is 2,400. But out of these, the worker is entitled to 15 days leave on full pay. So he's not working for 300 days, he's working for 300 minus 15, 285 days. Yeah, 285 days multiplied by 8 hours. So he's working for 2280 hours. 189 240 divided by 228 is his effective hourly rate, which is rupee 83 per hour. Good. So wages will include everything. Apart from this, there are some perquisites like medical benefits, education, recreation, housing, and a subsidized cost of canteens, cooperative societies. All these are also the cost of employer, though they may not be measured in terms of money always. So the payment system is clear, time-based, like actual hours into hourly rate, output-based, number of pieces into piece rate, a combination of time and piece that may be incentive, like some part minimum guaranteed, apart from that, output-based. Premium bonus plans like Health Rowan. Then there can also be some group plans and also some incentive for indirect workers. So what is indirect workers? Basically, don't worry about diagram. What is incentive for indirect workers? We say that what the management decided. Management decided that if the worker is doing good work, he's being more productive and efficient, some part of that should go to the worker. So in healthy plan, like you say, you give 50% worker. But then healthy plan had its defect that the worker might be very much interested in saving a lot of time so that he increases his bonus. Therefore, Rowan was a better plan where the wages of the worker will increase to a limit, but not beyond that. Some people felt that there are some indirect workers also because of whose contribution. Like we have seen in the MCQ that the productivity increases because if there is good supervision. So there's a supervisor is an indirect worker. So management feels sometimes that some incentives must go to them also. So let's say 40% goes to worker under the health plan and 20% or just 10% goes to the indirect workers. So there are certain incentive plans which also take into consideration a payment to indirect workers as well. One last question that I wanted to discuss about overtime treatment here. In a factory, the wage rate is 100 rupee per hour and overtimes are given here. So if an overtime is before and after the normal working hour, so if you're working for 8 hours, the ninth and 10th hour may be paid at hourly rate, or maybe beyond 9 hours is paid at a overtime. So overtime will be paid at 175% of the basic rate. This means not 100, but at the rate of 175. In this, the extra 75 will go to either overheads or abnormal. Then, if the overtime is done on Sundays and holidays, the worker will be paid at 225%. So he'll be paid 225 rupees, but the payment over and above 100 will be qualified as premium. So 125 rupees will go to premium from here, which may be treated as overheads, which may be charged to direct cost, or which may be charged to costing P&L. Now, during the previous year, the following hours are worked. Normal time, 100,000. Overtime, 20,000. Overtime on Sundays and holidays, 1,25,000. Following hours have been worked on job Z, normal 1,000, overtime 100, and Sundays and holidays 25. You require to calculate the labor cost chargeable to job Z and overheads in each of the following instance, where overtime is worked regularly throughout the year as a policy because the workers are not available or there is a shortage of workers. Yes, it is the management's decision. If they have been paying regularly as per health plan, and all of a sudden the management decides that we should switch to Rowan plan, they can do it. I'll take up this question later. Let's concentrate here. So normal is 100. Overtime before and after normal working hours is 175. If is on Sundays and holidays, it is 225. For the whole year, this is what is happening. And there is one particular job Z, which was done during the year on which these were the hours spent. We are trying to figure out the cost of job Z in terms of overheads under three different instances. The first instance is overtime is worked regularly throughout the year as a policy due to workers' shortage. If this is a regular feature, we cannot treat the overheads as we cannot treat the overtime premium as overheads. Neither we can call it abnormal because it is a regular feature. So what we will do is we may calculate a inflated rate. How? Let's calculate 100,000 into 100, 10 lakhs, 1 crore, 20,000 into 175, and 5,000 into 225. Find out the total payment you will make for 1,25,000 hours and divide it by 1,25,000 hours, you will get the inflated rate. So we have first workings hour, basic is 100, overtime during the normal after the work is 175, and on Sundays and holidays it's 225. If you want to find out the inflated wage rate, 100,000 into 100, 1 crore, 20,000 into 175, 35 lakhs, and 5,000 into 225, 11 lakh 25,000. So total payment during the year was 1 crore 46 lakh 25,000 for 1 lakh 25,000 hours. So this gives you an inflated rate of 117. If it is regular, then you will charge the entire job Z 1125 into 117 on the basis as a employee cost, direct. If it is irregular to meet the requirements of production, then it will go to 1125. First, you have to calculate how many hours. This 1,000 into 100 will go to job cost. On this 100, at the rate of 75 is premium. And at this 25 hours, 125 is the premium. So this premium, whatever it is part of overheads. Okay. So on 1,000 hours, normal. On another 100 hours, 75 rupees, 100 into 75. And on 25 hours, 125. So 7,500 plus 25 into 125. This will go as overheads, factory overheads. Why? Because it is not a normal feature, it's irregular. But because you have to make production, that's why you have to incur this expenditure. Third, overtime is worked at the request of the customer to expedite the job. So if it is customer who has made a request, in that case, the overtime will be charged to the, it will be directly charged to the job. So here again, it will be charged to the job directly as overtime premium, not to overheads, not to costing P&L account. Fine. So if it is regular, you can inflate. If it is because of irregular, you can charge it to factory overheads. If it is at the request of the customer, then again you can charge it to the job. And had it been because of non-availability of raw material or power supply or any other problem, in that case, you could have charged it to costing P&L, right? So I hope this is clear. Any questions so far? Okay, Akhila, your question is past May we are making healthy payment, but now we are moving to Rowan. Yes, it's perfectly okay. So if I had an organization, I moved to healthy plan. I decided on healthy plan, but later on I decided that the workers are really being very greedy about it and they are not looking at the quality. Material is wasted here and there, and they're not concerned about the machines. The machines require a break, but they are not giving because they want to produce more and more, save more time. So my quality is not up to the mark. The damage is being turned to everything, resources. I will move from healthy plan to Roman plan so that they know that the incentive will be available only up to a point beyond which the incentive might decrease. What difference does it make to charge the extra payment either to overhead or PLN? Uh, Costing P&L will only take up abnormal circumstances. Costing P&L will not take normal circumstances. Okay. Here is one illustration for. I would request all of you to definitely do it. With respect to accounting, uh, okay. Rohit, I'll also be taking the process costing part with you. So there I'll explain it in detail. With respect to accounting, if you tell me, you have to think about, I'm sure you've not done those chapters, but there are two ways. We have integrated and non-integrated accounting as far as cost accountants are concerned. So non-integrated means cost accountants are keeping separate books of accounts. So then it definitely impacts how you charge abnormal cost to the costing P&L. However, if you are in an integrated system of accounting, but despite that, for cost purposes, you must be able to segregate the total cost into normal and abnormal. So costing follows a concept of uniform costing. So it is uniform across the world. uh, you can compare the output of a unit sitting in India with someone who's manufacturing maybe in US, Germany. There is a concept of benchmarking so that you can see why a thing is costing more in India, why is it costing less in China, why is it costing still higher in UK or Germany or whatever country. So these are some of the concepts, but I'll discuss more about it when we discuss the process costing chapter. There it will be more important to understand the normal and abnormal costing. And abnormal must always move to costing P&L account. If you have any specific query, even related to material or labor, you can put it in the chat window or in the POS portal. I'll take up. Here, this question is important. This will go as per Factories Act. There are three workers, A, B, C. They are paid at 200 per day, 100 per day, and 300 per day for 8 hours. So you can find out the effective hourly rate is 200 by 8, 25, 100 by 8, 12.5, and 300 by 8, 37.5. So this is the performance or the hours they had input during a week. Now, as per Factory Act, we have seen that anything above 9 is overtime. And in a week, more than 48 is overtime. So if you look by week, it's only 1 hour. If you look by week, there is no overtime. And if you look by 1 week, it's 9 hours of overtime. But if you look by each single day, 10.5 minus 9, 1.5 hours of overtime. No overtime on Tuesday for A, 1.5 hours of overtime on Wednesday, 0.5 hours of overtime on Thursday, and again 1.5 hours of overtime on Friday. So 1.5, 1.5, 3 1.5s, that is 4.5 and another 0.5. So 5 hours is overtime. If you look at in totality, it's just 1 hour. But if you look at each day, it's 5. So the worker would be paid overtime for 5 hours. So in terms of an award in employee cancellation, workers are to be paid DA on the basis of cost of living index relating to each month. And they are paid 968 for the month. And it's payable to all the workers irrespective of wage rate if they are present or are on leave with wages on all working days. So apart from the wages, 200 for 8 hours, they are also paid 968 as DA. Each worker has to work for 8 hours on weekdays. Saturday, Sunday, weekly holiday. However, workers may work on Saturdays because of exigency of work for 4 hours, though they'll be paid full 8 hours and no other payment. Overtime is paid twice the ordinary wage rate if the worker works for more than 9 hours in a day. Excluding holiday, the total number of hours works out to be 176 in the relevant month. So 968 is the DA to be paid for a week of 176 hours. So 968 divided by 176 will give you that rate of DA per hour. This will be same irrespective of whether you are doing overtime or whether you are not working. This is paid at the rate of 5.5 per hour. So for worker rate is 25 plus 5.5, 12.5 plus 5.5, and 37.5 plus 5.5. So this information is relevant for the DA 968. Company's contribution to PF and ESI are absorbed into overheads. Okay, it will not be part of direct cost. So you have to calculate the wages payable to each worker. So if you look at worker A, 5 hours has to be paid overtime. That means 44 hours have to be paid at normal time, and DA has to be paid for total hours, 5.5 for the normal hours. So this is how we calculate for worker A, which we have already done. 8 hours, 1 hour extra, no problem, 1.5 overtime, right? Now overtime is to be paid double rate. Indirectly, this part of the question is basically the factory law as per the Factories Act. So I'll calculate for worker A and you can calculate for others. So we have seen 5 hours overtime, which will be treated double 10. So he will be paid 40 hours for this 4 hours, and this equivalent to 10, he'll be paid for 54 hours. So basic rate is 25 rupee per hour. DA is 5.5. So he's paid at the rate of 30.5 for 54 hours. So his total wages will be 1647. Okay. This is how you have to calculate the wages of each of the workers. If you look at B, there is no overtime at all. So he will be paid 48 hours at the normal rate. 12.5 plus 5.5. 18 into 48. And similarly for worker C, if you have, you can see 1.5 hours would be overtime, no overtime, 1.5 hours, zero point 0.5 hours, 1.5 hours. So again, he also is giving a total of 5 hours of overtime. So 48 hours normal, 4 hours extra, and 5 for overtime, equivalent to 62 hours. 37.5 plus 5.5, 43 into 60. Okay. So team, stick to the study material thoroughly. Give it complete one reading. I've explained to you almost everything related to this. If you have any questions, you may ask. Anything? Any question? Uh, no, this is the last class on this chapter. So we have completed material and employee cost and direct cost. This is the last class. If you have anything to ask, please let me know. I'll explain. Any doubt? Sure. So you can complete your material and labor chapter thoroughly. If you have doubt, when we meet next, we can take up any doubt in the extra time. Yeah, this chapter is easy. I think the entire costing as a subject is easy. Shouldn't be a problem. Yeah, thank you. All right, then we can call it a day. Thank you so much, all of you. Uh, I hope you will prepare these two chapters, past examination questions, case studies, everything thoroughly. Ensure that you do each and every question illustration from your study material as well as the questions which are given in the end of the study material. Please prepare them well. Thank you, all of you. Yeah, bye. Yes, we are done. Thank you so much. Good day. Thank you. Good day, everyone. Bye. We'll meet after some time now. Bye, everyone. Thank you.